Day 5. All right, we're back. A few hiccups yesterday, but back on track. It's finally Friday. So mainly what I'm looking at, a mixture. I use a mixture of order flow and charts. So we have Bookmap here, looking at that, using volume, and charts looking at trends. And I use 4 different time frames on charts. I look at the daily to get a big view of kind of what's happening, and that can kind of favor. That can change my risk management a little bit, because if I'm going with the daily trend, I'm more likely to go all the way in a trade, go further. And I also look at the hourly to see where my trade falls, because my trades usually happen over the course of 10 to 15 or so minutes, maybe even less if it's really quick. Yeah, actually usually less, probably around 5 minutes. And then I also go down into 5 minutes, zoom out here, and then when I'm placing things, I'm also looking on the 1 minute. Although by the time I get into 1 minute, that's when I'm usually looking here at Bookmap. So what I'm looking at first, I get into the charts, and immediately I probably open around here, like here. And I highlighted this because this is kind of when I got off. I didn't trade anything past this today because I was busy. Yeah, but first of all, what we look at is we look at the news, and as you can see, CPI data came out along with PMI data, and that kind of caused this huge upwards thing right here, little dick candle, but could also have been a bunch of other things. Overnight, the S&P climbed a lot though, so I was kind of looking for reasons to be bearish, because I felt like we had climbed a lot, but it was kind of just a climb and then a chop day for the most part. So, but when we reached here, I was definitely bearish, and when we reached here, I was definitely bearish as well, just from the shape of this huge lack of volume in here with news being traded. And that's a great way to frame kind of the charts as you come into them, is looking at the bigger picture of what's happening in the day. Do you think the day is going to be bearish or bullish? And yeah, I'm just looking at this. Pre-market, not really much happening. Then market opens and price comes up, goes down, goes up, and we reach around here, and I'm not like confident taking anything, but first what I always want to do is pop in here to Bookmap, and this is where you make decisions on entering trades. So 10 is right about here, right here is like this peak here, as you can see. And if you don't know Bookmap by now, these kind of colored bars show the amount of volume waiting here. So yeah, see, they're like 130 asks at this level. If you go below, then you'll see things like 98 bids at this level, and these are just orders that are waiting on the book for people to come in. So if you notice, I scroll up here, then this red one suddenly makes all these other ones look really small. But if you're just down here, then these ones seem big, back here, yeah, it's big. So when this starts happening here, and then you come down here, and I'm not seeing anything, steady chop, we're coming back up here, it's likely that we're going to go back to this volume level. So that's exactly what we saw happen. We saw this volume, lots of buying being taken out, and price could not push past that. So that immediately means that I'm bullish. When price can't push back past a level, even more so when it does it repeatedly on multiple levels. So as you can see, price came out, tried to hit through this, couldn't. Price came up again, tried to hit through this, couldn't again. Fills the orders, but doesn't go further than that. And that tells you that people aren't wanting to buy at prices above that. So then we see this, and then finally we see price start to come back down, and then we see things like this, where price now hits a bottom, well, a bid volume, and it reacts a little bit off that, but it doesn't react a lot, and we immediately come back down, and you see it continuing. By this point, by 10:20, I'm like, all right, we're bearish right now. Price action is still going down, going down, going down, going down. See this, and then at this point, I was waiting for a retracement to try and take, which is exactly what happened over here. You see price continually go down until it comes up, and you see all of this. This is like a huge amount of volume happening over a bunch of different levels. If this was all condensed in one, it would be one of these red ones, but it's across a bunch of different levels. and price is coming out lots of buying, but absolutely no pushing through that. So when that happens and you see us retest it again, right here, this little flat area, that's where you go short. And a lot of people did that, obviously, and then we had that price climbs back up, goes here. Nothing I love doing, entering. You're basically trying to enter between volume. So price comes here, a little retracement. We're bearish though, remember, because we've been seeing that pattern. So we're gonna wait for a retracement, price comes back down here, and when it's retesting again with your trend, that's when you enter. Because it's easy to kind of rationalize a trade direction either way. I could also come into this and be like, just looking at this, I could be like, all right, so then price bounced off of this volume, and obviously it's not pushing through this, so I'm actually going to long at this point because look, and I'm going to long back up here. But the issue with that is that if you're just zooming in like this, you could say literally anything. You need to look about it in the wider context. And the wider context is what the charts give you. Here, we move down past this low. We come up, not quite to the same high. That's telling you we're in a downtrend. So then you see the volume. This is the confirmation of the downtrend right here. See it bounce off of this, and when it comes here, when it comes back down again, this right here, this is your absolute signal to entry, because price is not going to come back up here again. It really isn't. So as price comes down here, enter, and you target literally anything. You could target these small bids, although with the pressure that we had, I did not target this. I targeted these ones down here because I saw it growing here. I knew. Another thing that tends to happen, the closer you are to price, the more bids will eventually come in. So if something is already blue down here, that means, yeah, it's going to get like orange eventually. So I was luckily able to enter here with a short stop loss, get a little 6-to-1 RR down here. And that's how you want to be making trades, because then you see price reacts off of this. But again, we're in a downtrend, so we see it going down again. Comes up here. This is perfect right here. We see it hit this, didn't even take all the orders out. There were still orders past that. That tells you, hey, we're going to enter again. Price goes down. This, I'm wary of moves that are like really quickly like this, because they're very unpredictable, and if you can catch them, great. I'm not one to stay in them for long, because when the market's this volatile, it could also push past your stop loss quite quick. So when things like this happen, it's best to get out. I took another trade here, then did not get out, because here was my take profit. I was waiting for this to get hit down here, and I was up here. Beautiful move down, so quick. I wasn't even paying attention, and then price was already here. And at that point, I was kind of like, do I get out or do I stay in? And unfortunately, I stayed in because I was like, I'm already in profit for the day. I might as well just see what happens. And eventually, price came up, smashed through my stop loss. Lost money on that, but whatever. I mean, it happens. It's just one more thing to be careful of. When you lose a trade, you got to ask yourself, as I was talking about in the last video, what did the market do that made me lose this? Not why did I enter that trade? And quite simply, it was a volatile market that I got in right at the beginning of. And on the downwards move, I thought it was going to go more down, but the market's volatility proved otherwise, and that it could go up. And another thing is also looking on the charts here. You see we kind of tap back into this pre-market support where like volume is trading around here. And I mean, that's not always going to tell you what's happening. It's not always going to be like, okay, now we're going to reverse market direction, but it is a sign. I personally thought the price was going to keep on going down to fill this out, but it does make sense why it stopped here. And that's really a big point of today's video, is focusing on rationalizing not just your trade thesis, but also the person that you're taking money from. You need to be able to rationalize their trade thesis, because if you don't understand who you're taking money from, then that's likely a sign that you're just getting tunnel vision, and that you can't prove why the other person's wrong. You can't prove why you're right either, So you got to be able to say, I'm making a smarter decision here. You got to be able to compare yourself to others in the market, because it is a competitive market. You're not just taking money from the ether, There's something going on here. And other people are thinking this is gonna go up, and they were right in this case. But at the same time, people were thinking the market was gonna go up here, and then went down. If you make the right call, dial in on why you made the right call. If you make the wrong call, dial in on why the other person made the right call. All right? If you focus on how to win in the market instead of why you lost, it makes all the difference. Because if you focus on how to win, you're naturally just going to lose less and less. You're not going to have 100% days, though. You're not going to have 100% lifetime. You're going to lose sometimes, but for the most part, if you focus on that, you'll be completely fine. And so I stopped trading here. Probably would have caught this uptrend and then maybe this downwards leg. But I don't even have the Bookmap data. It cuts off like 11:06, unfortunately. But yeah, I mean, I wouldn't have entered any of these because there's just simply not any volume. Even if there are big legs. That's one thing you gotta realize, is that things like this happen so many times a day that you don't really need to worry about catching every single one. And definitely don't get FOMO. If price has already gone too far, don't get FOMO and enter, because you might think that, oh, you have the higher odds of making this trade now that you know it's going in this direction, but at the same time, your risk to reward is now going to be significantly less. So if it does end up going bad, you've risked more for something that couldn't have got you as much as you could have gotten originally, and your odds weren't actually that much better. You make money on predicting the market, it is more so reacting to it, but reacting quickly in kind of a predictive manner, because like you're reacting to the fact that this volume is being hit and you're predicting that it's going to go down based off of that reaction. So there's that, but don't be afraid to miss out on a trade, because yeah, that's the kicker, and that's why you're going to lose. But to win, you have to just be on it, watching these volume levels. Price comes down here. Again, this was at the bottom right after here. See this huge tail being made. We see another tail being made, double tail, if you're like one of those traders. See this coming, it comes down here. It does not even, doesn't even damage this, order book right here. This is the, what does that COB stand for? Current order book. Doesn't damage the order book at all. The bids stay the exact same. Nothing is being sold down here. So price has to rally higher, right? And you see that at here, we've just had all these downward movements. High or low, we're going to go in that. And that's the thing you have to realize. When you're trading on a 5-minute time scale, it's not going to be the case that you're going to have one trend direction for the entire day. You have to constantly be figuring out, all right, which way is the market moving next? Which way is the market moving next? And you see these legs in an hour, this downwards movement in an hour, that could have multiple trades inside of it if you're trading on the 5-minute. This upwards leg could have you trading, even more times, It's, you have to dial in, and that's why I use the 5-minute and the 1-minute even to really get in on my trades. I think that's what anyone should be doing, really. But yeah, quick video today because I gotta go, and that's pretty much it. Using the chart, using the order book, using trend patterns on the chart, and then using volume on the Bookmap to enter trades. And yeah, that's about it. Deuces.